But before we get into their highly enlightening presentation, we're going to remind you that we want you to ask questions, and you can do that via the text. But first, I'm going to play a little YouTube video for you because I've just completed a new book and I want you all to buy it. So if anybody who's on here, that's your minimum requirement today. Buy the book, and you can get it from Amazon, and then go on and give me a great review. I need those, so please help me. So here we are. Many people have asked me why I wrote my new book, this book called The Equality Police. So I'm going to tell you right now. I realized it was time for me to call out socialism for the cancer that it is on free enterprise and capitalism. I also realized that I had become a practicing socialist in my business, which really struck me right at my core. Here I was extolling capitalism and conservatism, to use the current definitions, and yet I had been running my business as a liberal. I was allowing people into my life that only took from me and seldom gave back in exchange. I never created a culture of choices and consequences, and seldom confronted people with their lack of production. Worse than that, I was paying people to come to work and give less than 100% of their efforts during their shift. I was failing to hold others to what I considered to be my standards, and worse than that, I was failing to hold myself accountable to the standards I was preaching. And I run my mouth all the time preaching what I believe. That is what this book is about. My growth as a business owner and a human being, and doing the massive action it takes to beat my competition in the marketplace. This will be your first steps to dominating the market, whatever market you choose. If you want a foundation to build a path to create wealth for you and your family, put the lessons I learned the hard way into your arsenal and attack this current culture with an attitude of doing whatever it takes. I look forward to your success stories based on the lessons in this book, or your frustration and how you hated it and how it ruined your life. Maybe you could write your own book to stamp out the effect mine has had on the world. Or, even better, we can create a webinar series of us arguing against each other's philosophies. Let's do it. So, there's my pitch for my new book. You obviously know I'm a bit of a redneck, using my definition, not necessarily yours. And you may have been interested to see that there was a different logo than you used to be seeing. I have another company called 10X Excellence. I am a certified business coach, mentor for people. I'll help an employee grow their income with their current jobs, or I can help any business owner improve their own business. But anyway, that's not what you're here to listen to, so let's get started. So don't forget to turn your audio back on, and the floor is now yours.
Great. Well, thanks, Tom. And book seems very exciting, and we certainly are going to be buying copies and getting back to you on that. Thanks today for attending this webinar. It's a very specific webinar dealing with California property taxes. And we want to stress that California is a different animal. It's different than most states. In fact, most states don't even have a property tax when it comes to aircraft. So all we're talking about is California. And when we talk about valuation as well, we're only talking about California. And to be honest with you, sometimes the real world is very different than California when it comes to taxes. And you'll be seeing that today. My name is Robert Slavin. I am the president of Assessment Counseling Services. We are a full-service property tax consulting firm. We have been in business for 32 years. I do wear two hats. I am a licensed attorney, and I'm also a tax agent. And depending upon the engagement, I could be hired as either. I have staff today who formerly worked at the assessor's offices, who are going to be giving you some insight that I think is going to be very, very valuable with respect to property taxes in California. So before I go much farther, and I am going to be speaking last, I do want to introduce to you a gentleman who worked 35 years at the Los Angeles County Assessor's Office. He's been with our firm now 16 years, and he is a property tax expert. And he needs to turn off his telephone as well, too. Hey, anyway, his name is Dave Fisher. Dave is a well-known fixture in LA County. As a matter of fact, years ago, before he took the position, the aircraft division was very small in LA County. I hate to say this to private owners, but he was kind of responsible for adding approximately $2 billion to the tax roll in LA County with respect to assessments. So he certainly was a revenuer at one point in time. He knows the tricks of the trade. He also knows the tricks as far as getting reductions as well too. And when I say tricks, they're truly not tricks. I mean, we have different sources that we work with. We work with the Revenue and Taxation Code. We work with the assessor handbooks, and we work with different annotations from the Board of Equalization. But to start with, I'm going to hand this over to Dave. He's going to augment his biography a little, and then he's going to talk about a few things. Discovery is a huge issue of how the assessor finds out about your aircraft. He's going to be talking about Situs, and he's going to give you some very helpful hints. So with that, what I'm going to do is move this over to Dave. And here we go, Dave. And we'll start with the first slide.
Super Snoop. That's a good description of me. Anyway, my name is David Fisher.
Let me interrupt you a second. Let me interrupt you a second, David. Turn the camera to your right, because you're kind of a little bit more.
There we go.
There we go. We want to see all of you, even the part with the phone attached to your ear that should have been turned off.
Okay. Anyway, my name is David Fisher, and I have an accounting background, and I also was a private pilot. I have a couple hundred hours in the air, and the assessor decided to put me in their Marine and Aircraft section 15 years ago. And they assigned me
about 30 years ago. Excuse me, you've been with us 16.
No, in the Marine and Aircraft section, okay. 15 years. Yeah. So, and they assigned me the Van Nuys Airport, the Burbank Airport, and the Long Beach Airport. And I was told that my job was to first discover what aircraft were at those fields. Secondly, put a value on those aircraft. And thirdly, defend my assessments. So anyway, working on the job for a couple of weeks, I noticed I kept seeing these high-profile aircraft, you know, the BBJs, the Gulfstreams, et cetera, et cetera. So I got really curious to see, you know, how we were assessing these aircraft, and I would check our files, and I noticed that the aircraft owners were saying that their aircraft were based in Oregon or Delaware or Arizona, whatever, but I kept seeing them all the time. So I went to my supervisor and told him what was going on, and he said, Dave, why don't you start tracking these aircraft? So every time I went to the airfield, I put down the location where I saw the aircraft, put down the ID numbers, and figured out there were quite a few aircraft that were escaping taxation. So I sent out a bunch of tax bills, and what do you think happened? Got a lot of irate aircraft owners who complained to their local politicians that they were contributing money to. So I was invited to go upstairs and talk with the Board of Supervisors. Sat in their conference room, and their first question was, Dave, why are you harassing my golfing buddy? And So I was on the defensive. They weren't on the defensive. I was on the defensive. So just had to say, well, let me think about it. Oh, I know, Mr. Supervisor. The owner lives here, has a business here. I see that their aircraft in the hangar all the time. But you know what? If they can prove to me that their plane is based in Delaware, I'd be happy to cancel the bill. And I thought they were going to ship me to Lancaster, because I'm being such a pest. But instead, they gave me a promotion and turned over the aircraft section to me. And so that's what I was doing. And so let me tell you about discovery. How do we discover aircraft? Okay. First of all, we get a report from the state of California on all aircraft registered in the state of California with the FAA. Secondly, the operators and the landlords of these properties at the airports, they would send us a report on which aircraft were at their facility. Thirdly, the assessor, and they were only doing this once a year, they would go out and they take an inventory of all the aircraft on the various fields. They put down the location where they saw the plane and they put down the ID number. We also would referrals from other counties letting us know that they have owners of aircraft there that are claiming that their aircraft are actually based in LA, so they would let us know about that. And we would also check with the cities and find out what aircraft they thought was based at their field. We check with the tower, and the other thing that's really interesting, which they just started doing, was all these airports have what they call a noise abatement section, and so they track all these basically business jets that come in and out of their field. So we know when they arrived and we know when they departed. And also, we would get anonymous phone calls, people complaining that, why aren't you taxing Mr. Smith's plane? You're taxing mine. So what's really interesting is in the reports that we get from the FBOs, is we ask them to report all aircraft at their facility. Well, by the way, I was going out to the fields 3 times every week and tracking the planes. And so I'd have to confront the fixed base operator and say, I'm sorry, sir, why are you not reporting all of your aircraft to us? Well, what do you mean? Well, it seems like your aircraft, you're not reporting to us. Oh, are we supposed to report our aircraft? Anyway, bottom line, there's really a big conflict of interest on these reports. And secondly, another reason we weren't taxing these aircraft was the FBO were not giving us a complete list of the aircraft at their facility, because they also service these aircraft, right? They sell them gas, they sell them services. So a little conflict of interest when the owner of the aircraft says, hey, if you report me to the assessor, I'm going to move my aircraft across the field and have someone else help me. So anyway, big conflict of interest. And the other thing in I have complete access to the fields, especially since I was a pilot. They felt comfortable with me going on their service roads and stuff. And the key to the whole thing was looking for open hangars where you can see the aircraft and you can see the ID numbers of the aircraft. So that kind of would kind of nail it. And So the other thing I wanted to discuss, I guess, after discovery is Situs and the lien date, the tax lien date. Anyway, in California, we tax aircraft. We determine if they're based here, wherever they spend the majority of their time when not in use. So if the aircraft spends more time in Los Angeles, say, than anywhere else in the world, even though it's 10%, 20%, whatever it is, we consider that to be its base, and we normally tax it at 100%. And I had one very interesting case where I had an aircraft that belonged to a billionaire and challenged my assessment. And so I just asked the owner, well, if it's not based in Los Angeles, where is it based, sir? The world. The world's it's based. I only spend 20% of the time in Los Angeles. Otherwise, it's the world. Well, it doesn't work that way. We assess the aircraft where it spends the majority of its time. And then we do that as of what they call the tax lien date, which is January 1st every year. Anyway, so where the aircraft is eventually located, and then so having
David, this is Tom. Let me ask
Yes,
you a
Tom.
question. The
Yes.
tax lien date being January 1st doesn't mean if you take your airplane outside of the state on January 1st or your vessel outside the state, because I also do vessels, and you're outside the state on the 31st of December and the 1st of January, doesn't mean that you're not subject to tax, does it?
That is correct.
You do some sort, the property tax guys, as far as I know, do some sort of calculation, and I think you've just talked about where it spends most of its time. Is there a number of days that it has to be inside of California before it becomes subject to property tax?
No, if it's where the aircraft spends the majority of its time. So if it spends most of its time in Los Angeles, it's taxable. And if they remove the plane for a month around January 1st, they don't escape taxation. Because again, the bottom line is, where is the aircraft spending the majority of its time? So if it's here before and after.
So theoretically, if it was flying 24 hours a day, 365 days a year, it would never be subject to property tax. I realize that's an absurd example, but I'm just saying, you're talking about time on the ground, right?
Right.
Okay, good. I'm just trying to clear up some of the silly questions that I get asked, and I want to make sure that because you're the resident expert, I get the answers from you, and that this information is available permanently.
Right, Tom, and we get that question a lot, and there's one other thing here we want to discuss is we mail out these what they call a property statement form to the aircraft owners, where they're supposed to let us know about their aircraft. And the thing is a lot of times when these people have a mailing address outside of the state of California, what happens is, for whatever reason, they don't get that statement. And if the statement is not filed, they end up getting a 10% penalty for non-reporting, plus the assessor, me, can put down pretty much any value he wants. So, because we don't know what the condition is of the aircraft, and so we guess high. So he gets a high value plus a 10% penalty simply because he didn't file the statement. And so that's another thing people have to be very careful of. And I can give you different examples here. One of the taxpayers had a hangar at the Van Nuys Airport, very large hangar, and he had several aircraft in that hangar, but he wouldn't allow me on his property He wouldn't tell us what aircraft was there. He wouldn't answer our reports. He wouldn't answer our inquiries. And so anyway, what happened, Tom, with someone like that is, you know what? He's fair game. He wants to ignore us, fine. So I had to get his attention. I sent him a bill for $1 million. I'm serious. Got his attention, Tom. So next time I was around his location and spying on him with my spy glasses, trying to get some ID numbers, he came out with a white flag, Tom. Came out with a white flag. Said, okay. I give up.
Okay. We're now going to talk a little bit about valuation, and thank you, Dave. I think that was very informative.
Can I interrupt you a second, Robert? We have a question. They want to know how many years can the assessor go back?
4.
There's a 4-year statute of limitations.
Okay.
And unless there's a finding of fraud, and you know that's another issue that we'll briefly discuss as well too. I'm going to talk a little bit on my turn, which is last, about the lien date and some strategies of dealing with the lien date that might be helpful to aircraft owners upon acquisition and sale of their aircraft as well too. But I think, you know, David was a go-getter at the assessor's office. As you can see, many of the staff are the same way. So the bottom line is, you know, we don't believe that evasion is a good thing to do. Ultimately, they'll find out if they find that you have not been reporting your aircraft, they will request or demand and even subpoena flight logs to determine where you've been for prior years, and you don't want to be in that situation. So our recommendation is always, if you get a property statement, you need to fill it out. Don't ignore it. And secondly, if you are spending a considerable amount of time in California, and as Dave indicated, if it's habitually located in California, habitually located means the majority of the time in California, then you know something, you should be reporting, and that's our recommendation. So the next person who's going to be speaking is Kent Meyer. Kent Meyer formerly worked for the Ventura County Assessor's Office. He was there for 17 years. He's been with our firm for 2 years. Kent, his latest position that he had at the Assessor's Office was called an Assessor's Representative. And as an Assessor's Representative, he actually was the one who acted sort of like the attorney for the assessor, where he would not present the case, but he would represent the assessor at the Assessment Appeals Board. He is an appraiser, has done all sorts of appraisal. He's been with our firm now a little over 2 years. He has transitioned. He is an advocate and working for taxpayers. So he's going to talk a little bit about the about how you arrive at market value for aircraft here in California. So with that, take it away, Kent.
Thanks, Bob. Morning, Tom. Morning,
Hi.
everybody else. Hi. Yeah, I've got 17 years with the Ventura County Assessor's Office. Got 2 years working with Bob. My primary background in the Assessor's Office was doing real property appraisal, not with aircraft. As an appraiser, we look at 3 approaches to value. Those approaches are sales comparison, income, and the cost approach. For aircraft, when you're taking looking at the approaches to value, the income approach is not truly relevant, and the cost approach would be typically used when you're doing like kit aircraft, something you might build out of your garage, which would be a low value aircraft in most cases, or a very unique aircraft like perhaps the Spruce Goose or something like that. So sales comparison is the primary method of valuation, or the preferred method of valuation for aircraft. The problem with that is getting sales data. Usually when you're working with aircraft, there's a lot of non-disclosure agreements that occur when there's a sale of an aircraft. Trying to find an aircraft just like the one you're trying to value or the one that you own is not exactly easy because there's not a huge market as far as the resale market. And trying to find something that sells within a certain period of time. You've already heard mentioned lien dates several times. You're going to hear it a few more times. January 1st of every year, personal property is valued in California. And it's valued, again, at its fair market value for property tax purposes. But if you're trying to challenge a value that the assessor enrolls, and you're going to use comparable sales, you need to use sales that are no more than 90 days after the lien date or prior to lien date. So you can go virtually any amount of time prior to lien date, but after lien date, maximum 90 days. And if you've got a 1990 aircraft that you're valuing, then you better find something that's similar model, same make, and preferably something in the same era, i.e. around 1990, 1991, 1989 built. That way you have...
Can I interrupt you this for a second? This is Tom.
Absolutely.
I have a couple of questions that come in, and this again is fully directed at the whole group. I don't know who you want to answer these, but the first one is, what is the liability for having a leased aircraft that's used in California when the owner is out of state? And in his case, perhaps a foreign owner.
I'm going to let Bob answer that question.
Hi. The answer to the question is it is one who owns, possesses, or controls personal property who is responsible for the tax. And it could be any of them or all of them. So if you are leasing a aircraft to a third party, the third party is operating out of California, contractually, that third party may be responsible for the tax, but as far as the assessor is concerned, they're going to look to the registered owner. Okay, if they could collect from the lessee, they'll do it, but it is taxable. So if you are a lessor, you better be careful as to where that aircraft is habitually spending time.
Okay, got it. Second question. This person is saying, my plane is registered in Oregon but has been in California for a few years. I just purchased a hangar of my own and want to start paying California property taxes. How do I go about that?
That's a good question. And the problem that you have with the form is that it asks the question, when did you acquire the aircraft? And since this is a new aircraft, the question is, when did it come to California? It may prompt an audit. That's one of the problems with this discovery process of reporting. You may be in a situation where you may owe escape assessments. As was indicated earlier by Dave, the most they can go back is 4 years. It's a rather unfortunate situation, but the problem with compliance is that you don't necessarily get forgiveness. Now, it depends upon how fastidious the assessor is going to be. If it's a lower value aircraft, they may just assess it for the current year and not bother. If you're talking about a business jet or more valuable aircraft, that may be a different story. And we're going to talk about this as well too. You always have to put everything into context. $100,000 aircraft is taxable at approximately $1,200 a year, which is considered a fairly minor assessment. So it's a lot of money for some people, and understandably so. For a lot of these business jet owners, it's a few gallons of fuel. But they certainly do have the ability to go back in prior years.
All right, I have another question. Are there any business use of the aircraft that would exempt the aircraft from property tax. And then it has, I think this is a comment, it says such as vehicles, a car, or a bus that are not subject to county property tax.
Remember, there's an in lieu tax for automobiles and registered vehicles with the DMV. We don't register aircraft with the DMV. So the issue is they are taxable property. The fact that they're used for business does not warrant a reduction. What you can get is if the aircraft is devoted to over 50% of its time for air charter, you can get what's called the air charter exemption. And Kent is going to be discussing in valuation. What's really crazy for property tax purposes is if there's a determination that the market value of an aircraft is $100,000. In addition to that $100,000, the assessor will impute sales tax to that $100,000, and that becomes part of the assessment. And Kent will discuss that in just a moment. But there is an exemption for air charter over 50% of the time where you get the deduction for that. But the fact that it's a business jet, it's used for business purposes, no, it doesn't matter if it's business or personal use.
And I want to clarify what I think you just said, that instead of talking about 100,000, if you have a $10 million aircraft and it's being used for business under Part 91 or less than 50% of the time in charter, the state can add to the value what would have been the price of the sales tax, even if you go through some process and legally avoid paying the property tax. The property tax guys can add it to the value.
Correct. It has nothing to do with the real sales tax, which you, Tom, deal with, okay? Those are the real dollars. We're talking about assessed value dollars, which, remember, it's just a little over a 1% tax rate for personal property. But you're absolutely right. This is an imputed component of value. Kent will talk about that, but they always add sales tax for any purpose, okay, in determining market value, unless there is the air charter exemption.
Okay, and all right, go ahead, Kent. I'm sorry for interrupting you, but all of a sudden, all these questions were coming in hot and heavy.
That's great. Just to add one other thing, there is also the historical aircraft exemption. That goes into a whole different field where the aircraft has to be on display, public display, at least 12 days out of the year. It has to be more than 35 years old, and it has to be owned by an individual, not by a corporation. But that's something completely different.
Okay,
anyway,
so this question probably actually pertains to you, so we don't have to keep moving the camera around. Is there a tax exemption for aircraft used exclusively for firefighting and other emergencies in public service under contracts with a state or federal agency? And I'm presuming that is a property tax question.
If the aircraft were actually owned by the government, it'd probably be exempt. But if it's owned by an individual who then leases it to the government for that purpose, I highly doubt there's any exemption for it. I'm not aware of any.
Okay. Thank you.
And I'll address that too.
Okay. So anyway, back to the sales comparison approach. All property in California is taxable, and the Revenue and Taxation Code is the Bible for all taxation in California on property tax. And the Board of Equalization also publishes various handbooks on the subject and advising the assessor on how to value property. When we're talking about aircraft, the go-to resource as of our valuation guides, typically the Blue Book or the VRAP. And the Aircraft Blue Book, as of 1997, is the go-to valuation tool that the assessor's office uses. So the way the assessor will value an aircraft is they'll look at the make, the model, the year, and go ahead and check the Blue Book for the average value of the plane per the Blue Book that year. Then they'll do adjustments. Dave had mentioned the property statement that has to be filed on an annual basis. Part of the statement includes a section where you can put down your airframe hours, your engine hours, condition of the plane, any damage to the plane. You want to stress the negatives on this. Hopefully, it depends on how busy they are. The assessor will take a look at all of that information and do their adjustments based on what the Blue Book says. So if you have extensive hours on your airframe or on your engines, they will do a negative adjustment. So when they look in the Blue Book, they find the actual value that the Blue Book is publishing for an average condition plane. And for dealer concessions and such, the assessor will automatically subtract 10% of the value. Then they start doing all their adjustments for hours on the engines, etc. If they happen to know there's low hours, they'll do an addition. Based on the avionics in the plane, they'll go ahead and do additions or subtractions. And then in the end, as Bob was touching on, and as Tom, you were asking about, they will also add the sales tax. And that's something that's been argued in courts. It's supportable. There's no getting out of that. So the sales tax gets added to the overall value of the plane, and the assessor will enroll the value that they come up with. What you can do is, prior to valuation, fill out that property statement, stressing the negatives. If the assessor ignores it, you don't agree with the value of your plane, you can challenge it by filing an appeal. Bob's going to get into more detail on that shortly. The assessor's handbooks that I mentioned, the last revision for the general aircraft was in 2003. And they use an example from a 1970 built Cessna that was purchased in 1993. So it's well dated. The Blue Book on this particular make and model right now is about $75,000. So they're looking at a relatively low value aircraft. And they go through the exercise showing you exactly how everything is adjusted for, and the assessor sticks with this guideline unless they have other evidence. Now, the BOE used to publish their own cost guides on aircraft, but trying to find the information, as I mentioned before, there's these non-disclosure agreements. It's difficult for the individual counties and for the BOE to come up with fair sales analysis. And that's why they now rely on Blue Book and the aircraft. So Bob is going to start talking about some of the other issues. You know, if you have any other questions about the valuation right now, I'd be more than happy to answer them. Anything else come up, Tom?
I'd like to add one thing.
Oh, Dave wants to add something.
Yeah. Tom, what you might find interesting, Tom, is the state of California comes in and audits the assessors to see what aircraft they're taxing, to see if they escape sales tax.
Got it. I totally, completely understand that.
Okay.
There's a new question coming in. If a fire aircraft leased from a foreign owner, home based in California, but used in other states and other countries for much of the time, how is it taxed?
You know, and you're talking about a aircraft used for firefighting purposes?
It says if a fire aircraft is all this question, so I'm presuming that's true.
You're asking some very good questions over here. This is very, very specific, and I'd be happy to answer or at least help with that issue. Usually when there's a contract with a governmental agency, there are provisions within that contract that deal with property taxes as to whether or not it is going to be exempt or not from property taxes, or whether or not that entity will pay for the property taxes. But typically speaking, it is taxable. We deal with, you know, there are lots of different cases about aircraft that are used for different purposes that travel around the world. There's the Geometrics case, which dealt with a aircraft that was mapping areas through Africa, although it was based in California. You know, that's a real specific question, though, that you're asking. And if you'd like, at the conclusion of this webinar, we're going to have our phone number available, and you know, we could certainly have a conversation with you about that.
Yeah, Robert, my internal heart is always a salesman, so go ahead and give him your phone number right now. Don't add time. Don't add time to it. Speed is power.
Okay, well, how about really easy? 1-800-PROP-TAX. That's real easy. 1-800-PROP-TAX.
Thank you. Thank you.
Okay.
So continue.
So I'm going to continue here and deal with a couple of issues. I'm sorry about that. I'm going to talk about the lien date, and I'm just trying to watch time over here. That's all.
Don't
We
worry.
talked
Don't
about
worry
January.
about the time. Do not worry about the time.
Okay.
I'll let you know. If you hear me
Okay, thank
snoring, you've been talking too long.
The lien date, very important date. And, you know, Tom works with you on sales tax issues. And you know, one of the things that we try to do for property tax purposes is never have you purchase an aircraft at the end of the year and bring it into the state of California. And the reason is it's very, very simple. Let's just say you acquired an aircraft in July, okay, or September or whatever date, okay. You know, as soon as you bring it into the state of California, what's going to happen is once it's located in the state of California, you're going to be responsible for the tax because it was in the state of California prior to the lien date with your ownership, and it's planned to be habitually used in California. So if you're going to acquire an aircraft, you know, put it into service, bring it into California after January 1st, and you will not have to pay the taxes for that particular year. So we're coming up to 2019. If you're going to buy an aircraft, don't bring it into the state of California until after January 1st. Likewise, if you're going to sell an aircraft, we have a client who just sold an aircraft the first week of January. And it was a very unfortunate situation because they received a tax bill, and this was a G4, and you know they depreciated a considerable amount, but it's still a significant amount of tax. They sold the aircraft in the first week or second week of January. They get this bill and they said, "Gee, Bob, are we responsible for it?" And I said, "Yeah, you owned, possessed, and controlled the aircraft on January 1st." They said, "Yeah, but if you take a look at the bill, it says for taxes from July 1st, 2018 through June 30th, 2019. And that's the 18-19 fiscal year. Why aren't I responsible for those taxes?" And I said, "The problem is you owned it on January 1st. Even though you sold it before the fiscal year, you are responsible." So the next question I asked is, well, let's take a look at your sales agreement, okay? Did you prorate the 2017-2018 fiscal year taxes? And there was silence. You know how in real estate you would prorate your property taxes? Well, with an aircraft, I mean, you know, why wouldn't you prorate your property taxes? That wasn't done. I said, okay, what about the upcoming property taxes for the 18-19 fiscal year? Is there any mention of that? No, there was not. Now, granted, even if there was, would the county here in California, any of the counties, would they abide by that? The answer is no. That's a private agreement between a buyer and a seller. The county is going to look at who owned, possessed, or controlled on the January 1st lien date. So it's a very harsh rule, something that you need to be cognizant about at all times. There were questions regarding statute of limitations, and the answer is that yeah, there's a 4-year statute of limitations, and the assessor does have the ability to go and assess back, and that's one of the things that you know you always want to be cognizant about as well too, is that you know if they ask for flight logs, what are you going to say? You don't have flight logs? And then are you going to sign that under penalty of perjury? You got to be very careful. Kent was talking about valuation, and he was talking about accentuating the negatives about your aircraft to get a lower value. And my comment about that is, sure, that will help with a lower value. But what I also want to remind you is that the assessor's office is a governmental entity. And you never know if you're going to disclose something to the assessor that's going to be in a file. And if they need it documented, that's going to be in a file. And as Tom would recommend, just like us, a full disclosure. And when you sell an aircraft, you should disclose whatever issues you need to legally disclose. And if you don't, and that information is in a file at the assessor's office, and somebody ever gets a hold of that information, there are some potential liabilities. And that's outside of the scope of what we do for a living, but it's just something for you to consider.
So let me ask you a question on that specific subject. I apologize for continuing to interrupt you, Bob. If someone is doing the negative assessment to try and bring the valuation down for the purpose of property tax, let me ask this is a dumb question, but and at the same time was trying to sell the asset, which would mean they wouldn't be accentuating the negative, they'd be accentuating the positive. Do the county property tax assessors ever look at what's available information if the guy's trying to sell it? Because they're going to be one's high and one's low. Do they ever take a look at that?
Absolutely. Absolutely. And it depends what site it's on, but the assessor does regularly go onto websites to look at aircraft. And they do that with real property as well, too.
Okay.
So they do make use of the internet for sure.
Thank you. So continue.
So yeah, so if you have damage history, obviously you should go and disclose it, but don't disclose it to the assessor and not disclose it in your maintenance logs to a new buyer. And that's just makes common sense, and everybody knows that. So what I want to talk about right now are considerations. You get a tax bill. Does it make sense to file an appeal? I mean, that's really one of the issues that you need to always consider. And one of the first questions that I always ask is there enough value at issue to warrant an appeal? I could tell you this much, and people will differ, but if I receive a $50 bill from the IRS and I don't know what it's about, I just pay the bill. Okay. Now you may disagree with that, but something. If I can't figure it out really easy, I'm not going to go to my CPA, who's going to charge me a heck of a lot more than $50. Okay. And I don't want to go into a situation with the IRS where all of a sudden I'm bringing up a small issue that could balloon into a bigger issue. So the first thing you got to ask yourself is, okay, does this make sense? And I get telephone calls from people with low value aircraft, and they get a $300 bill. And, I talk to people, that's my nature. Okay. But the real issue is, does it make sense to hire a professional? Does it even make sense for you to go out of your way to deal with a governmental agency, file an appeal, and deal with the assessor on something minor? That's an answer only you can answer. Okay, but I know professionally.
I'd love to address that issue. I'm sorry again. I was doing a presentation I think I was in Cleveland to the Ohio Bar Association. And the reason I'm telling you this story is that if you think that California is the only tax crazy state, I'm going to tell you this story. I was getting up and I was talking about these issues. And there's all attorneys, and one guy gets up and asks me, how can they do that? Well, the answer is they can do whatever they want because they're a tax agency. So that's always the answer. And secondarily, one of the people in the audience said there's a particular taxing agency in the state of Ohio that whenever it needs money, it just makes up bills and sends them out because they know there's a certain amount of people who will just pay it. So it's not just California, it's any socialist idiot. I'm just making that comment. And buy the book, Equality Police. Go ahead, Robert, continue.
No, point well made. So only you could answer those questions. But I have to tell you, as a practitioner, I want to save my clients money. And what I don't want to do is I don't want to take on an issue where I'm saving somebody, where I'm successful in saving them money, but my fees are more than the cost of handling it. And obviously, sometimes we work on percentages, sometimes we work on an hourly, but it has to economically make sense. And so that's one of the first considerations. So the next is there any exposure in filing an appeal? Anytime you file an appeal with the Assessment Appeals Board, the assessor, through their discovery, can ask about prior years. So if you have a situation where maybe you haven't been assessed for prior years and you were located in California, maybe that valuation may not be a fair evaluation, but you're exposing yourself to prior years' assessments. So you have to weigh that. Does it make sense to file an appeal or not? There's audit concerns, and that dovetails into that, and escape assessments. Then there's the time and energy. You always have to consider your time, somebody else's time, and of course the cost. And there's a cost associated with your time. And understand that people like Tom and I, we enjoy doing what we do, but this is not just a hobby. Okay, this is how we earn a living, and there's a cost associated with pursuing things with governmental agencies. So if you do decide to file an appeal, who's going to be involved with the appeal? Clearly, there may be questions of your FBO that you may need to be talking to a mechanic. You may need to be speaking with the pilot. As far as maintenance logs, items like that. There would be, of course, a professional. If you chose to use a professional, you'd need to deal with an appraiser or a tax consultant, and maybe even your CPA as well, too, because there's a lot of financial records as to how you have capitalized different assets for the aircraft. Many times the assessor will ask for the general ledger, and they'll want depreciation schedules. They'll want all sorts of information. So if you do decide to go to the Assessment Appeals Board, some things you have to remember. Number one, and probably the most important, is that the presumption is that the assessor is correct. That's a horrible presumption, but that's what you're starting with. The assessor is correct. Dave Fisher, who you met, handled hundreds and hundreds and hundreds of appeals. And do you know how many appeals he lost? 0. Okay, he won every appeal. Now, David, on the other hand, was also a halfway fair individual. If documentation was provided and it was adequate, he would enter into a recommendation or a stipulation. David was considered more reasonable than most folks at the assessor's office. So keep that in mind. The assessor is presumed to be correct, which means that you have the burden of proving to an assessment appeals board what the value is. Now, I say lack of experience with aircraft. The assessment appeals boards know very little about aircraft. This is the same board that adjudicates values for single-family residences, retail properties, office buildings. That's what they mostly do. They do personal property as well too, but aircraft is just a completely different world for most of these people. They don't understand the lingo. They really don't understand much, and they have a tendency, because the law says that the assessor is presumed to be correct, to go with the assessor. So if you want to present an assessment appeal, you need to be prepared. You really need to be prepared. And that's where we deal with the standard of proof. And that is, you could talk all day long. You could be the most knowledgeable person in the world regarding a particular aircraft. And that's great. That really is great. That may help explain things to the board. But you need to produce evidence. And evidence is always the key. Documentation. If you're saying that there's a problem with the paint or the interior, you better have some documentation as to what it would cost to paint that aircraft, or to re-rag it, or put a new interior in that aircraft. If you have damage history, you better show those receipts. You better show as much documentation as possible to the Assessment Appeals Board. The assessor will cross-examine you, and they will ask tough questions. And one of the reasons why David won 100% of his cases is that people weren't prepared. They did not know the process. And he won against really good appraisers as well, too. but they didn't understand the assessment appeals board process. And that is sometimes as important as it is to understand valuation. Kent talked about how there's a lack of comparable data, and it's frustrating. It is really, really frustrating. And if all you say is, hey, here's something that shows a listing, listings aren't admissible. If you say, hey, here's a sale, but you don't know who the buyer was, you don't know who the seller was, you don't know what the terms were of the transaction, you don't know what the engine hours are, the airframe hours, etc., and the condition of the aircraft, the assessor will try to eat you up. And when they're talking to a board that really doesn't understand aircraft, that could be dangerous. So what happens if you lose? Okay, you really don't have a lot of options. Superior Court, you could always appeal to Superior Court. However, if we're dealing with valuation, the Assessment Appeals Board in the county is considered the trier of fact. And what that means is that a Superior Court will not second guess an Assessment Appeals Board when it comes to valuation issues. If there's a legal issue, that's another story. The cost of going to Superior Court, very, very high. Very, very high. So what that tells you is that if you really have an issue with evaluation, you really should try to work with the assessor and try to resolve things on the front end. And where is the front end? The front end is your 577, your aircraft verification form. If there are issues with the aircraft, don't just fill out the boxes. You could present a narrative to the assessor, and you could provide documentation to them and explain why there are particular problems with that aircraft. And that's a very helpful thing to do. It's also very helpful to work with the assessor and be respectful with the assessor as well. If you supply information, you're timely with them, they can be very helpful at times and other times not. And if you have to go to the Assessment Appeals Board, which we frequently have to do, be prepared, because everything has to do with preparation. So, and any questions here?
I don't have any more questions, so we're at about the 57-minute mark. So is there any closing statements that any of the three of you would like to make?
Anything, David?
Just always respond to the assessor. If you don't respond, you leave yourself wide open.
And I think that there's a theme over here, and that is be respectful of the assessor, don't evade them, and if you get a request, don't ignore them. As David said, they could come up with whatever value they want, just as you said too, Tom. They have that power, and you don't want to be in that type of situation. Incidentally, if you don't pay your property tax bill, what happens in California? 10% penalty, and interest. Interest accrues at 1.5% per month, 18% a year, and there is no process for abatement of penalties or interest in California for property taxes. There's no negotiation, there's no offers and compromise. The counties are very, very, very tough. So keep that in mind as well too.
Okay, so that will conclude, unless there's a question. I'm watching some new questions come up. One of the questions is, how many years can assessor go back? We've already answered that. It's 4. It says, which Western states are most friendly towards aircraft property taxes? And I think Robert made it pretty clear in the beginning that he's only talking to you about California property taxes. Is that correct, Robert?
That is correct.
Okay. So I believe that we have answered all the questions. If you have any other questions, you have Robert's phone number, you have my phone number. In some cases, I can answer some of these questions without going to Robert, because they're not just property tax questions. They're about the documentation. They're about, can the taxing authority actually do that? The answer is 99.9% of the time they can do whatever they want. They don't have to be ethical. They don't have to be moral. They don't have to be fair. There's nothing that requires that, so don't expect it. But I want to thank Robert Slavin, David Fisher, and Kent Meyer for participating in this webinar. And unless any one of the three gentlemen have anything else they want to say, that will end our webinar today.
No, thank you very much. And if anybody has questions, please feel free to call. And we are going to be purchasing your book, Tom. Looking forward to it.
There's a second part to that, too. You have to give me a great review, though, on Amazon.
How about Yelp?
Amazon. Go ahead. What were you going to say, Robert?
I'm going to read it first.
Yeah, you got to read it first, then give me a great review on Amazon, and then you can go on your own social media channel or Yelp and say nice things about it. Anything that you can do to assist in the sales of that book would be awesome for you, for me, and for your fellow Americans. With all that, thank you very much.
Got it. Thank you.
We're signing off. Bye.